What's up, YouTube? It's Joe Catchbalia sitting on the couch, making some money investing in fractional real estate online, as usual. So, it's only been about 3 weeks. August 26th, I put out a video, and it was really probably just late in the night of the 25th, but, early morning 26th. I put out a video about I'm liquidating my Lofty portfolio. Gave you a whole list of reasons why I just thought, I just was planning to sell everything. I have been a net seller since then. I even took a little cash off the platform today. But a lot of things have happened in those short 3 weeks that actually, several of those things directly addressed issues that I brought up. And so I always want to just be as fair as possible to all these platforms because I want to see them all win, right? I'm doing this channel because I am really interested in fractional real estate investing. I think it is the future of real estate investing in general. The more good platforms we have out there, the better off we'll be. Now, Lofty did not go and fix everything. It's not like it's all of a sudden a perfect platform. But today I did buy. Today was the first day since then that I bought a significant number of tokens. If you've been watching my channel, there were still a couple properties that I was picking up tokens still in. For different reasons, but today I bought a new property I'd never owned tokens of before, and I want to get into a little bit about why. Right, like am I just waffling here? Did anything change? And I think we've had some relatively meaningful changes. So this was the list that I read off of when I did that video. Most of this stuff is still true, right? They don't have a standard as far as they're not trying to get good properties. They're trying to get any property on the platform. That's their stated goal. Oh, before that though, this is the date, right? The average token price was $33.33 when I made that video. It's now down to $31.23. So, another $2 off, which is like another 4% off of the original purchase price, and it's a little bit more than that. So, we've seen a lot of value destruction on this platform. I don't want to downplay that at all. Partially, this is where some of the new opportunity is coming from, right? Like we have even more discounts than we had before. But I want to get into more of the, not the philosophical stuff, but the framework stuff that I think is problematic, and some of the stuff that's changed. So they're still not trying to get good deals, right? Their stated goal is to just have anything on the platform. They're still doing very limited screening of the operators. They haven't said anything about changing that. One of the big things that I was concerned about at that point in time is they weren't limiting the scope of operations of the DAOs at all. And that meant, the one that I was the most concerned with is they were letting there was a sale of Bowmanville. The property that the DAO owned was sold, and then there was a vote to keep the money in the DAO and do something else with it. That worried me, and then they were starting to do that with this other property, Odom, that I had an interest in. This is actually my biggest holding on the platform. We've got 530 tokens on here. It is under contract to sell, and there was votes out to, use that money, move it somewhere else. And that, that was a very scary prospect for me, right? Like if there's no clear cash to path or clear path to cash, man, I don't know what's going on there. But if there's no way to get to cash by selling in real life and token prices never come back, then you could, have a scenario where your money is just trapped on the platform forever, right? And so that really worried me. Well, it was like a day or two after I did that video, Jerry, the CEO of Lofty, came out and said, "Oh, we're not going to allow that, right? When you sell off the property that the DAO holds, that the cash is going to be distributed, right? The proceeds from that sale will be distributed to all the token holders." He did say they're looking at other places where they might or might not limit stuff as far as the holdings in reserves or refinancing cash out to buy additional properties. But one thing that he said, declared it definitively, man, I don't know, I'm having a rough day today. One of the things he said definitively is that he is, if you sell the property that the DAO holds, then that's, you're liquidating the DAO. So that's a big change, right? That's a big change in the risk profile for me. If I can get everybody together and sell this, that cash isn't going to get hijacked. So I thought, okay, that's great. This, limited historical data and annualizing 1 month, they didn't really change this, but it was about a week later, Jerry put out this tweet about, they're experimenting with taking out the projected annual return, which is, a number that has never been a very honest projection, right? Like they've never made any assumptions regarding vacancy or collection loss, or regarding repairs and maintenance. Their projected annual return was always just like if it's fully rented, and then we just take out management, insurance, and property taxes, and that's about it. The Dow fee, So the fact that they are now at least testing with some new things, right? Taking that out, one of the things that I think was a deceptive number to begin with. I'm glad they did that. They're still annualizing the other thing, but this at least shows like that they are. There's some additional thought going in that direction. And I know there's been discussion around that a lot, but I thought this was good that they're at least testing this here. And, none of these things on their own are some huge thing. It honestly a little bit feels to me that like there's I think all the money leaving the platform, it has to be something that Lofty feels a little bit. As much as they say, oh no, this isn't the worst time we've ever had, it can't make them think that things are going really well, right? When you just see a lot of money leaving the platform overall. So, it seems like maybe they're making some effort to move things in the right direction as far as that goes. I think they're a long way off. I'm still just using Lofty Assist to get all my historical data, and I think, because that exists, it probably reduces everybody like me from harassing Lofty too much about the historical data, but I'd still like to see it on their site, right? I also think that they probably have access to a little bit deeper data than what's available to Limas to put on Lofty Assist, right? They might have things that were never exposed on their site to begin with. I'm not sure about that, but I think that the more data, the better as far as I'm concerned. So, hopefully they still move in that question. The other thing is like the co-ownership structure, the way the debt is set up. I mean, you can see like there's been a lot of like interesting little things in the right direction for me, right? The co-ownership structure, the way that the debt is set up, well, it really bothers me. I think that it's basically it's often hiding risk from the people buying the property because they don't see, the cash flow isn't impacted by the mortgage. But that's because something outside of the Dow is paying that mortgage, and it's a risk that we can't really assess because we don't know anything about that co-owner and how well they are able to pay that mortgage. And so I've always just looked at the property itself and said, okay, if we had to take over the mortgage, could we actually make the payment, right? Like that's one of the things that I do as far as part of my due diligence. But it is, the structure overall, I don't think most people are doing that, right? And so one of the things that's interesting that happened since then is I think this property launched since then, or it might have launched right before. I'm actually not sure. But it was right around the same time anyway. So this is one that Ario launched on the platform with the mortgage in the Dow's name. And we've seen that... or not necessarily in the Dow's name because it is a subject to, they basically just took over the property with the mortgage in place. But it's, the setup is that the Dow is paying the mortgage. Now, this rental yield is actually with Ario paying the mortgage for the first couple of months, I think, and then the Dow takes over. And so, it's not, I think this hasn't sold really well because with that structure, the yield ends up, getting knocked down pretty low. But I like that this is happening, right? I think this might not be the best property to have been launched with this model, but I think this model it's much more sustainable for co-owners themselves. And Ario even mentioned that about this one when he put it up. He's like, yeah, I can't just bring all these co-ownership ones onto the platform if I'm paying the full mortgage for it. There's only so many that I can do that with, right? Where if the Dow pays the mortgage, he can do unlimited ones of these as long as they make sense and as long as, they're selling out. So, again, I think another step in the right direction. I think Alawa was like that too, and I think the one in Hawaii, I don't know if I'm saying it correctly, but I think that there's other ones as well where So it's not the first one, but I was glad to see one launch like this, and I'd like to see more, right? So again, the more, one of the things that I've thought a lot about is how many of the things that I was complaining about could Lofty's community fix really without, by ignoring, like, okay, we don't even care what Lofty says, we're just fixing this ourselves. And one of the things is, if you just have co-owners launching more properties in this manner, and this becomes the standard, that could, it definitely changes the deal, and it brings the risk into the light, right? It's like, we understand, okay, there is a mortgage, somebody's paying it. If the property can't afford it, where's that money coming from? All that is something that we see now versus where, sort of hidden before. It's not hidden in the fact that it's not disclosed. It's disclosed. But if you look at the average user on the platform, the way they're doing the math around the mortgage, the way they're doing their, it's something that whenever I've mentioned to somebody, hey, that property can't even sustain itself, they're like, what are you talking about? It cash flows great. So most of the time, not everybody is looking at that, despite the fact that it's being disclosed. So I think having a more normal structure like this, I'd like to see it a whole bunch more. We're still having the difficulty using debt, the terrible governance structure, the fees are still high, like that hasn't changed. The liquidity, honestly, where money is leaving the platform, I think this is even worse, right? Like, you can just tell there's a lot of tokens that I think are solid properties where the value's just gone down, really just because of a lack of liquidity on the platform itself. So if you wanted to sell out of something right now, a lot of good properties you'd have to sell at a loss if you're selling the tokens, right? There's a huge push right now to sell properties in real life. Alec, I think, has 4 or 5 now that he's working on, maybe even more than that. Earl's still working on some. I think that's a good thing, right? Getting all of the really trash properties, ones that are just never going to be good investment properties, getting them off the platform makes a ton of sense, right? There are certain properties where your operating expenses, are just not even, they're going to be higher than your rental amount, right? Like, forget about having debt on that property. You just can't cover, taxes, insurance, property management, repairs and maintenance, capital expenditures, all that stuff together. Ends up on a monthly basis being higher than the rent when you really look at things, right? And so getting a lot of those properties off the platform, I think it's the right move, and so that's something that was already a big push, but we're seeing more and more of it, and so not necessarily exactly from that date, but I think just today I saw 3 or 4 new sale votes come through, as a positive, like, yes, we're going to sell it. So I think that's great. The inaccurate tax forms, who knows? Let's see what happens this next year. That hasn't changed, but not resolving some of these known issues. Well, this announcement today, I was very pleased to see. This is the Universal Lending DAO. I've been complaining about this for 9 months now. December of last year is when it first came up. At least it was first, something I was alerted to. They finished their internal, look at everything. So they had paid out $14,000 and change that they, in principle, that they weren't supposed to. And in addition to that, they had raised more money than they thought they had raised. They had raised, so when you add those two discrepancies together, the Universal Lending DAO, and so Lofty is, one I liked, I think that, Jerry acknowledged, yes, this has taken a long time. They finally resolved it, and this is what it is. And because it was Lofty's mistake, Lofty owes the DAO $14,000, and so it's going to be paid, to the wallet holding the DAO's funds. And in addition to that, because of the other money raised, there's a total of that hadn't been acknowledged on the platform for whatever reason, right? They were only, and when this was brought up, they were saying, oh, no, we only ever sold 1,000 tokens or 2,000 tokens, but it was really 2,274, something like that. There was a discrepancy about how many were actually sold in total. Because of that, there's now $34,000 in the DAO that wasn't there yesterday, right? Or at least that they are acknowledging that's there. Now, that kind of is worrisome because it means, okay, well, you definitely don't have a separate bank account if, okay, the $14,000 Lofty's adding, but that other $20,000, how did they not know about it? I don't know. So that's a little bit worrisome. But the fact that they actually acknowledge this is what was their mistake, they're kicking in that $14,000 that they accidentally paid out in principal, right? They're not clawing that back from whoever received it in the past, which is one of the things that they had floated at some point in time. So I think the fact that they've resolved this, I'm very happy with. I think they did the right thing by making that payment to the DAO. I think it's a little bit, one of the things they're doing is saying, okay, we're looking for one of the owners of the ULD to act as the PM and asset manager. I don't love this, right? Because this is basically either that person's going to do it for free or we're going to pay them. And so this is a cost of, an activity that Lofty was originally doing when they set this up. And now they're saying, well, we're not doing that anymore. It's now an expense that's borne on the ULD that wasn't necessarily there in the past. I still think, having someone be in charge of this is going to make it, it can't go worse than it's been. Well, it could, I guess, but it seems difficult for it to go worse than it has gone. So, okay, fresh money can be lent out to a lot of the DAOs need money, and, that'll be more loans outstanding that we can get some yield on in here. So overall, I was very pleased with that result. These were trading in the, I bought tokens in this one today at $28. I bought them, or $27.50. Someone bought the next ones up. I think it was only one, or there was only a couple that were like 28. And now, the starting price is 50 again. Now, is anybody going to buy my tokens at 50? Probably not. But the fact that nobody's trying to fire sale these anymore you can see these are the prices. Yeah, this was my purchase. The only one was bought more than that. But yesterday there was some trades. You can see like people were just selling these incredibly cheap. And I think that we'll see that stop now that there's this, and they mentioned that they're going to send an email to all the owners to let them know how it was resolved. And so I think that's a huge step in the right direction. I mean, this is one of the things I've been complaining about a long time. They got that fixed. Now, are there still a lot of other unresolved issues? Yes, right? Like one being they're still showing that they have this referral program where, I've referred tons of people to this platform back before I really started getting negative on it. None of them have ever, been able to get their free token or anything. I think maybe one time early on somebody got one, because I think that's why I have this one that's sitting here. But other than that, so that's been broken forever and still just sitting on their site. So that still exists. The token stuck in pools is still a thing. It seems like one of the, the DAO that had the, one of the lending DAOs that had a payout issue for forever is finally resolved. I think that is more to do with Zycor complaining about it and bringing it up constantly than it has to do with Lofty themselves. But the fact that got done is nice. I'm sure there's plenty of others. I actually got paid way too much, I think, for 90 Madison today. So there's still going to be some issues there. That is actually maybe a PM issue. I don't really know why that happened. I don't think it is, though, actually, because it looked like that it was set up right. Anyway, there's still some issues there. The appraisal reports and the third-party reports being, having the wrong client. We'll see what happens. There hasn't been a whole bunch of properties raised. Poor communication regarding these major issues. I don't think there's been this huge change there. And then, it's just talked about their lack of accountability. Well, I was glad to see that they really, they took accountability in this ULD issue, right? One, mentioning that, we did take a long time doing it, but also the $14,000 just that Lofty paid that. It's a good sign. And I know they've done stuff like that in the past. But this is one that has just been, outstanding and festering, almost as long as I've been on the platform, just a few months less than that. And so, anyway, lots of little things have changed like that. And so I have, I still think I'm going to liquidate. Like I said, I mean, I'm not, unless I think we'd need more movement in that direction, for me to get really bullish on the platform. But I'm going to go slower. Like I said, I bought tokens today. This average price just being so low, right? It is like, if you look on the platform, there are deals to be had. And the biggest thing that I talk about all the time is it a risk-adjusted return, right? Like, okay, am I getting paid enough that I feel okay taking the risks that I'm taking? And so I just laid out a whole bunch of risks that make this platform, questionable for me. Well, if I can buy tokens at, since then I did buy some single-digit tokens and bought and sold. Can I do this? I want to show you this. Let me see. Well, no, I'm not gonna do it. Every time I try to do something that I didn't plan on a video, it screws things up. But anyway, I bought and sold like Winkler tokens several times. I bought them at like $7 or $8, and then sold them when they got into the low double digits. If you can buy these tokens for $10 or $20, some of these I think it's risk free. Some of these, even at these prices, I'm not going to buy. But then, some nicer properties like this one today, Umlin. I had to go back and look at my video of what I said I'd buy this at. This was in February it launched, or at least February is when I did my video on it. I think it launched in February. At $50. Today it's trading at $26. Now you can see that there is a $1 token sale in here. This is Earl and someone else trying to do a peer-to-peer transaction, but have it be recorded. I think what happened from listening to other people is that transaction was taken into account when they created the Oracle price, which I didn't realize that happened, right? I didn't realize the Oracle was taking into account the limit orders too. I thought it was just the pool prices. So that was really interesting to me. But anyway, now the Oracle price on this is like $25 and change. And so, I bought 20 tokens in this. When I went back and looked at my video, I had said, yeah, I'm not buying this at 50. When it gets to 25 or 30 or 35, I'll probably be a buyer. And that's true. I bought some at this amount, and not a whole lot has changed. Now it's not paying out a whole bunch right now. It's a short-term rental. I don't expect it to be a steady payout. I never thought that was going to be the case. This is one that I'm very concerned about. If the Dow ever had to take over this mortgage, it'd have a very difficult time paying it. I don't think that it would be able to, so that would be problematic. But at the price, I think we could liquidate and I wouldn't get very hurt, right? And so I think taking that into account right now, because the equity is basically 50% off or close to 50% off, and the debt's still there. It's like close to $800,000, I think. And so, when you look at that, the discounted equity plus the debt, we're looking at about $1.1 million in total value. Yeah, if you have transaction costs and everything, I think we'd lose some money on this. But overall, it's very close, right? And if I can buy it at a price, where I believe the yield, and this is interesting that their projected annual return is 6.95 right now. But I believe the yield will come back on this one in certain months, and there'll be a month where you'll get a big pop in token prices, and I'll just sell these again. And so that, the one thing that is, but also too, just researching this co-owner a little bit, I just feel pretty comfortable that he's going to be able to keep paying that mortgage, right? Because that's the big risk on this one. As long as he's paying that mortgage, this deal can work perfectly fine. It's that risk is the thing that I really was worried about. Well, okay, if I'm getting the opportunity to get a really big return on this because I'm buying it at such a discount, it's worth it to me, right? That's a bet I'm willing to make. Which reminds me, though, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all of those platforms, Lofty included, and on any of the platforms or any of the properties you see me talk about. Man, I cannot talk tonight. Just because I buy tokens in something and I'm like, I'm willing to make this bet, it doesn't mean it's the right move for you, right? You want to do your own due diligence on this property. Is this a risk you're willing to take for the current return? I mean, look, if you're somebody who wants current yield, last month was not a great month, right? There'll be these months where it won't be doing well at all. There should be some months where there'll be fantastic yields. We'll see what happens. But again, you want to just do your own due diligence, make your own decisions about those. Don't buy these things because I am, and don't not buy them because I don't, right? Like it is, you just have a different situation than I do. Also, in the description to this video, I've got a link to the Discord that I have set up. There's, I think, over 130 of us now in there on a regular basis, maybe even more, talking about Lofty, Arrived, Mogul, Ground Floor, all different platforms. Saul's Lot, I did a video on the new DAC that was out last night. So feel free to jump in, enter that discussion. If you're only a Lofty investor, which I know the majority of people are, that follow me or watch this channel, it's because of my Lofty videos. Maybe think about using some of those other platforms. That's why I put the links in every video, right? Is because I want it to be easy to find those and to realize, like, hey, one, it's just a good diversification tool, right? Like, there's no way, Mogul's my favorite. I'm not putting all my money on Mogul. I'm still taking a very measured approach to it. I've been on that platform less than a year. Who knows how it's going to turn out? But I want to be, but I still have some money on Lofty, even though I'm moving some off. And honestly, if they keep making a lot of these small changes in the right direction, I might change my mind about that. I might decide to leave some and let it ride. If the Odin property sells next month, that's a big chunk that I'll probably move most of it off of there. But if there are some of these opportunities, maybe I'll pick up some more tokens. I still think there's a ton of risk on the platform. Like I said, most of these issues still exist, but the fact that there was some meaningful changes in more than one of these, right? The biggest one was the immediate, finding out, okay, no, we're not going to let you just hijack cash from a sale and move it to another DAO. That was, because that was really the last straw for me, from a risk perspective, right? Like, if you can just get into a position where you can't touch your cash, it's super scary. But as soon as that went away, I felt a little bit better. But all these little things, starting to add up. And when you combine those with, what's happening here? Yeah, with additional discounts from the last time we were talking about this, I don't know. I think that at a certain point, as the facts keep changing, I'll definitely, keep an open mind about changing my mind about it. Because I do like making money, right? And when you can get something at a really good discount to what, to the real world value, which some of these aren't, right? Like, we had Sarah up for sale, and Sarah, this Sarah Ave property, and it looked like we weren't going to net any more than this 15, or I think it was at the time 16 or 17 or $18. And that's why we decided, okay, let's just keep renting that one. So some of them, just because it's discounted doesn't mean it is a deal, right? I don't own a lot of these ones. Some of them, I think they do make a lot of sense, and it just is going to depend on, that's why you have to dig into the actual numbers of every single one, look at what the real world value is, look at, all the different things. Is there a tenant in place? Are they paying? Who's the manager? All the stuff we always talk about. What's the market like? That's why I think even at the cheap prices, a lot of these, the only thing that makes sense is to buy the tokens and then sell the property in the real world. But there are properties on here that, at the right price, could be fantastic long-term investments. They're few and far between, because that's how Lofty intends it, right? They're saying, hey, we just want every property on here, and you just find the ones that are a good deal. It's a business model that's just so hard for me to understand, why they think that is the right way. But that's what that's their intention. And so, yeah, you just have to really dig. Is it worth the time to do that? I don't know. I do this because it's just super interesting to me. I don't think it's, honestly, is it the best use of my time? Or, if you just are trying to look for, okay, let me do the due diligence once and then make an investment, and it's a passive investment. And I think Mogul makes a lot of sense for that. I think Ground Floor makes some sense. Maybe even Arrived. We saw some really good discounts at the last secondary market, opening, because they've only do that last week that they did that. So I don't know. It is definitely. I think there's a long way to go before I'm going to be real bullish on this platform. But I just want to be, I just want to give them a very fair review, right? And I think a lot of stuff changed in the last 3 weeks, and so, a couple of really big things, at least to me, things that were really important. The ULD and the no longer moving money, that a sale means we're liquidating the Dow. Like those two things on their own meant a lot. And then all these other little things I think matter too. Anyway, I'm curious if you've been negative on Lofty, have you noticed any change lately? Is this all in my head, right? Is this like, okay, I decided to quit, and so then all of a sudden it was like, oh, well, look at all this stuff that's going right. I don't know. I'm curious if anyone else sees it. Obviously, there are still tons of people losing money, right? The fact that the average token price is continuing to go down means that, people that are selling now, that the money we're making today is because somebody lost money in the past, right? Somebody bought it at 50, they sold it to me at 25. That person lost money, even if it's in the pool, right? They bought it at 50, they staked it in the pool, it sold for 25. The amount of money in that pool, like, at some point in time that equates to a loss for somebody. You have to really understand the pools to know who's, overall who's losing that money, and pretty much it's spread out, I believe. It's kind of interesting to think about because I don't know exactly how that shakes out as far as who's going to be the most hurt by that. That'd be something I should look at the math of it and figure out and talk about. But anyway, if you change your mind on it, go ahead and jump in the comments. Let me know. I know there's at least a couple of you that are like, what are you talking about? I was hoping you'd never talk about Lofty again. And I think that's fair, right? It is, it's a platform where you really just have to be, have your eyes wide open, be looking at every possible risk, really understand the properties that you own. Think about who the manager is. Think about who who the other owners in that property are. But overall, overall, almost everything that I had mentioned that other time still there. But some green shoots, right? Some like a little bit of promise, some good stuff happening. And so just wanted to mention that, especially because when I do my 52-week challenge this week, you're going to see that I bought a bunch of tokens on Lofty, and I didn't want that to just be like, oh, what are you doing? I thought you were liquidating, right? I'm not trying to trick anybody so they sell off so then I can buy cheap. Like that's not the goal, and I don't think enough people watch this for that to even have any real impact. I'm definitely, like I said, I took cash off the platform today, and I think I still will. I think I'll still be a net seller overall, but maybe I'll end up leaving some on. Maybe I'll end up, who knows, again, depending on how things go from this point forward, maybe they'll fix enough stuff that it'll change my mind completely and jump right back in wholeheartedly. Like, we'll just have to see. And I still look at every single property that gets launched on the platform. We could have, you could have some new co-owner come on and bring a whole bunch of great properties, or an existing co-owner that starts to bring more deals on the platform that I'm excited about, and that could change things dramatically. Anyway, you can tell I'm really having a hard time talking today. I have no idea why. That's going to be it. Until next time, I'm just going to keep making mistakes so that you don't have to.